How are we getting on, people? Luke here from LAGFX. We are back today with another Sunday Sessions video. In today's episode, we are going to go over 3 pairs on my side, and then what I'm going to do is pass you over to James, our head analyst, and he's going to go over some of the pairs that he is looking to capitalize on this coming week. If you do enjoy this video, please be sure to give it a like. All the feedback and all the support is very much appreciated. And if you do have any comments or you're unsure about anything we've gone through, by all means, leave it in the comments below and we'll be sure to get back to you as soon as possible. Now, the first pair I'm going to be looking at today with you guys is the Great British Pound to the US dollar. This market specifically is predominantly bearish. The overall bias of the market for me is bearish. I am actually expecting a continuation in bearish structure moving forward. Just looking here on the 1 week time frame. So when I look to analyze the markets, I like to zoom out. So when in doubt, zoom out. And that is exactly what I like to do. I like to zoom out of the markets and see what's going on. This will help me find my bias and basically give me the direction that I want to trade in. We always want to trade with the prevailed trend rather than against it. There's a term, your trend is your friend, and we live by that. So as we can see here, this market is predominantly bearish. We have a swing low here, came up to set a swing high. We then have another swing low, which actually broke the previous swing low. So this confirms bearishness. Now what we've seen is a new swing high being set. This swing high that's been set in the market has actually come lower than the previous high. So again, this confirms bearishness. Now what we've seen as of recently is we had a distribution take place here, or consolidation, whatever you want to call it, depending on how you look at the markets. We name things differently, but we've basically seen a rally, consolidation, and then prices reversed and moved lower down. Now, what we have seen recently, prices just delivered us with, is a break of structure. So this was actually a low set in the market, and this has just been broken. So this move here confirms to us that it's going to continue lower, and hopefully we should see this swing low get broken, setting a new lower low, and then we can expect a bullish retest and so on and so forth. So how am I looking to capitalize and tackle this market this coming week? Well, if we move down time frames, we can see how price has broken that structure. So that's great. That confirms bearishness moving forward. What we would be looking for now is some kind of retracement, a bullish retracement. Again, seeing a break of structure take place after the retracement has finished, and then a continuation bearish. So I'm just going to draw out a little example of how I think price is going to play out. So we've obviously broken this low here, which is great. We have seen a green candle be delivered. This is on the day time frame, so that's good. This tells us that the bulls are now taking over in the market, and we can expect price to probably continue up higher. So on this trail up, what we are looking for is areas where there are lots of supply. Any unmitigated areas, clear and remaining liquidity. There's loads of things that price could be trailing up to look for. But I like to typically look at supply and demand levels. We basically want an increase in supply in order to be able to push the price lower down. So we would say that this is probably a realistic supply zone. We can see how prices come up, set a peak here, and then it's managed to push price down. So we know that there is some kind of supply here. Again, we've got buy to sell candles here, so there could be some supply, remaining supply up there. So we can expect price to come up somewhere within this region, I believe. And then I think we'll see price take its next nosedive down, and we'll see this continue. Now, we could buy before the sell. We could do that. Obviously, that will come with risk. We don't really want to trade against the trend. That goes against one of my rules. So I would probably look at waiting for price to come into an area, show some signs of displacement, a typical break of structure, and then structure being delivered, which would be bearish moving forward, and then we would look to enter in on the markets. Now, another thing we can do is grab our Fibonacci retracement tool, mark the swing high to the swing low that's been created as of now. And this also gives us an area to work with. As we can see, where I've actually drawn my prediction on where the price could go up to, it actually lies very nicely within the golden ratio box that I would draw. So we'd get our rectangle again. We would mark the 3 golden ratios of the Fibonacci, being the 38.2, the 50, and the 61.8. I would then mark this as the fib box. And what we are wanting to see is price trail back up, show signs of displacement, break of structure, and then signs of a reversal basically, and then we would see price move lower down. That is when we would look to enter, and that is when we would look to capitalize on a bearish swing moving forward. So from that, I think it's quite obvious that I am looking to be a seller in the market longer term. Yes, we could look to capitalize on a buy position beforehand, you know, the buy before the sell, but that does come with risk. So if you are wanting to do that, just be careful, be mindful, ensure that you are using and implementing good risk management, you know, moving stop loss forward, moving stop loss to entry when you can. And yeah, I mean, that's my bias for the Great British Pound USD pair. So now what we're going to do is move over to the Euro USD, and I'm going to give you my rundown on that. Okay, so moving over to the Euro USD pair, as we can see, we have a lovely market that has been produced for us. We have a swing low and a swing high. This is protected because the overall structure of the market is bearish. We have a very similar layout as we do to the Great British Pound USD pair. We are basically wanting to see this low here get broken, and then we can expect a very large retracement back up, setting a new lower high and then a continued lower low. Now we have just recently seen, if we zoom in a little bit, we have just seen how this low has been broken. So this whole swing up here was in fact the retracement before the following impulse. So I'm led to believe that we will see a fractal retracement and then a continuation lower. And I do believe that this low will be broken very soon. So it would be something like this. Grab that remaining supply, take the price lower, and then we may see, you know, a bullish retracement go up, come higher, set a lower high, lower than this one, and then go on to set a new lower low. Now again, how would we look to capitalize in this market? Well, we could basically look to get in on the next impulse going down. So we'd wait for the retracement, sit on our hands and be patient, and then as soon as we have confirmation of that reversal and the new impulse taking us down, that is when we would look to get involved in the market, and we would ride this down. We could in fact just ride it down to this level just to be safe, but I can imagine price coming lower than that. So again, just to give you my bias on the Euro USD pair, I am biased to a sell. That is the overall direction of the market, but we can expect a short-term buy before the next sell impulse, and then we can expect a large retracement, you know, a higher time frame retracement to take place, which would be bullish. So we could look maybe for those buy positions as well. Now, finally, moving over to the AUD USD market, we have just recently seen a BOS take place here. We could have looked to capitalize on the market moving forward with sell positions from this point. So as soon as we have that lower high that's been created, we could look to have got in on this impulse down. What we're wanting to see now is a lower low be produced. So for this low to be broken, this would mean that this would be the new protected high, as this was the high that was set before breaking the previous lower low. So we would mark this as the protected high. This is assuming that, you know, this low has been broken, and then we can expect that once the low has been broken, price has to basically retrace, but it would retrace anywhere below this point here. Okay, so price could come up, it would retrace, it would find again areas of supply, grab liquidity, and push the market lower down. So what we are looking for is a continuation in bearishness. I will be waiting for the end of this, and then once we see a break of structure moving bullish, we know that the price is looking to go bullish. We're looking for that retracement. We could in fact hop on this because it is a higher time frame retracement, so we can expect that it's going to be a large move up, and we're not going to get caught out on any quick reversals. So we could look to get involved, and then as soon as we have a BOS somewhere up here, we would then look to take that market lower, and then we could continue holding until we have a break in this extreme low that's been created. As you know, in bearish structure, we can expect that this low will actually break eventually, setting a new lower low, and then we can expect a new lower high to be created, and then a continuation moving forward. I went in more depth with Great British Pound to the USD than I have with any other pair. I've been quite brief with Euro USD and AUD USD, but my analysis is pretty much the exact same with every single pair that I've gone through today. I am obviously biased to sell into the market. We are looking for those sell positions, so we just have to be patient. And it doesn't mean to say that we can't capitalize on the retracements and the reversals, but we just need to be very careful. Obviously, it goes against one of my most important rules: never trade against the trend. But as it's a higher time frame retracement, we're looking at a week retracement. We can expect that the market is going to be bullish longer and for a longer period of time. So we could in fact capitalize on small buy positions. As I am an intraday trader, it wouldn't be something that I'd be holding for days and days on end. We could just look to get in and out each day, and then as soon as we see bearishness moving forward, as soon as we see confirmation that the price is ready to go lower, that is when we'll be looking to capitalize on our huge sell positions. Now, I hope you've enjoyed my brief analysis. If you've learned something from this and it's given you a good gist of the markets next week, happy days. That's what we aim to do. What I'm going to do now is pass you over to James. He's going to run over some of the pairs he's looking at and give you some insight onto what he's wanting to do and how he's looking to capitalize on the market this coming week.
Hey everybody, hope we're doing well. Hope you've enjoyed the analysis that Luke has provided. Now I'm going to come on over and show you a few of the markets I'm looking at, a few of the markets that to me are going to probably provide some good trading opportunities in this coming week. So I'm starting off here on the US oil market. This is another one I included last week, and if you remember correctly, I was looking for sales from multiple different supply zones. Now, as prices played out, demand was very dominant in this last week, and therefore we did blow through the original two zones that we were originally looking at. But what we have done is we've traded up to mitigate this little distribution in the market. Now, if you remember prior to this, I was actually hoping that after breaking structure and setting this swing low in place, I was expecting this to be the zone that got mitigated. This region up here, this last buy to sell, clear institutional control because we wipe out some of the liquidity in there. So to me, ideally price would have come up to there, although we could argue if we took the entire buy candle, which would be that entire region, we could then argue, okay, price has actually tapped that. But to me, the real positions that I wanted to see mitigated were higher up here. But regardless, price has played out the way it has. We've distributed here, made that break of structure, so the displacement to confirm that after the distribution we have reversed the market. We are now looking to go bearish. So that is from there where I then highlighted the three zones, three regions in the market that I thought price could trade back up to during a correctional wave to mitigate before finding enough supply to then hopefully at least exceed this final target, if not the overall final target of the higher time frame bearishness. So as of recent, if we go down to the 15-minute, just looking inside of this point of interest, very clear distribution here. The main thing that we're looking at, as stated in a webinar that me and Luke hosted the other day, the main thing we want to see for entry confirmation or just a reversal is a displacement. So this should have been a protected low in the market following this bullish structure that we were once following. We should have actually seen that low in the market right there be protected if the bullishness was to continue. So the fact that we've actually had price blow through it, and on top of that blow through it with a lot of supply dominant, a lot of selling pressure, evident by the very few and shallow retracements we've had since that movement lower, to me that is a sign that this zone has introduced supply that we are looking to reverse. So I'd be looking inside of this as an impulsive wave down. I'd argue that we have a nice buy to sell in this region that I'd be looking at to hopefully see price tap into, potentially come and mitigate, and therefore get involved into sell positions from. So if we just change that to a point of interest, that is the main region I'm going to be looking at. Price may not trade us back up to this before moving lower, so we're going to have to just be cautious as the week plays out, looking for sell positions on these lower time frames. Arguably we could, if we wanted to sacrifice RR, we could just try and place a position with our stop above the high, and then taking our take profit all the way down to this region. We're still coming out with over a 2-to-1 RR trade, or 1-to-2, sorry. So That is arguably something that could be done, but that is not the way I trade. I prefer to refine entries. But regardless, that is my outlook for the US oil. Okay, so now moving on over to the Great British Pound to the yen. This market has been bullish, this being an impulsive wave up, which I could actually highlight just to make things a bit simpler. Have this as our impulsive wave, just like so. And then we saw price trade down into this last sell to buy, so a demand zone, accumulate down here, so that is our Wyckoff, or would have been entry confirmation had we seen that play out at the time. But one thing that is worth noting is that when we come down to fully mitigate an impulsive wave like we've done here, evidently what's happened at the top is a lot of supply has been introduced. Now, when we're in an uptrend or when price is trading bullish, the supply and demand balance at the start is going to be very heavily tilted in demand's favor. Now, as that trend plays out, one thing to look out for is how deep is it mitigating the previous wave. Now, if we look at the last impulsive wave that we saw, we only came down to mitigate one of the very first positions here. We didn't trade all the way down to mitigate this zone like we have here. Now, what that is it's a sign that more supplies entered the market, demand isn't as strong, so we may want to be ever so slightly cautious when placing long positions, because it's a very early sign that demand may be running out and this trend may no longer be in the favor of running the liquidity highs. But regardless, we are still bearish, so following structural laws, we are still going to stick with the analysis I have got. So as you can see, this is an impulsive wave after the accumulation happened. This is our first bullish impulsive wave after the reversal, which came to displace what should have been a protected high. Now, since doing so, I noticed that we had some fractal displacements in here. I thought we needed to trade back down, mitigate this position before we could get enough demand to trade higher and exceed this final target up here. Now, what's happened is that we've made a push down. We've had a correctional wave, which has tapped into this as a supply zone. We've then started trading lower, having more fractal displacements again. So my expectation is that price is going to trade us down into this zone where I have an alert set. We'll then hopefully find another accumulation and then go long until at least this final target. However, if we want to try and capitalize on the longer term or higher time frame structure, we could look to ride the rest of our position all the way up to this region. Now, this is the Australian dollar to the US dollar. The reason I wanted to include this is because price has been following my analysis on this pair perfectly. You can see that we've had obviously bearish structure. I've been identifying impulsive wave downs where they've come back, mitigated positions, another impulsive wave down. We then came, mitigated here, managed to get in on a trade, which then exceeded the low. So it's a new lower low. This now becoming the final target. This should have been a protected high. As you see, price came up, sweep some of that liquidity, started to confuse our buyers, because once it does that, it's an early sign of bullishness. But then straight after it came, it exceeded the final target, so reconfirming bearishness. And then straight after that again, we've come up, broken the high, shown signs of going bullish. However, because we've already done analysis, we knew that price could very much just be coming up to mitigate this supply zone, which is exactly what it did. We have a distribution here, a nice reversal in the market. Although arguably it could have been rather difficult to get involved in this position just because of how heavy the drop is after the mitigation. We would have hoped to have tried to get in on position somewhere higher up. If not, moving forward, we will be hoping to try and find some sell opportunities from some regions inside of this impulsive wave down. At maybe this point, it may be a point that it creates as it's going lower, because in my eyes it still has to exceed this final target before we do have full confirmation that we're back bearish. So until this low is exceeded, I won't be looking to go short. But once this low is exceeded and we have reconfirmed to ourselves that we are bearish, I will then start looking, as I stated, inside of the impulsive wave for regions where we can look to go short, which, just off the top of my head, without trying to go too deep, without trying to refine things too massively, those are the two main regions that I would say act as unmitigated positions that will attract price. So just keep our eye on those moving forward. So as stated, yeah, just expecting price to exceed this final target, put in a correctional wave, and then it's inside of that correctional wave we will look to try and go short from a supply zone, potentially one of these two. But regardless, that is going to conclude my section of this Sunday sessions. I hope you've enjoyed. I hope you've managed to take something away from the analysis that both me and Luke have provided. A lot of free information here, and also just giving you our outlook on these markets so you get a gist of how we're looking to tackle these as the week plays out. Obviously, we are day traders, so we're looking to execute trades, if possible, on a daily basis, given that the correct criteria is delivered to us. If you want the opportunity to get involved in some of these potential entries that we're looking at, make sure to get into the Learning Lounge group chat. If you want to take your game to the next level, then go onto the website and look into the VIP chat. That is where we give more precise analysis, precise entry points, and pretty much just show you exactly when and where we are placing. However, I don't want to go on too much with that, so thank you for watching, and I will see you next week in the next Sunday session video.